I'm Donato Weinstein. I work for the City of San Jose's Economic Development Department, and I'll be trying to facilitate today's webinar. We'll be joined by special guests, Julie Klaus from the SBA, Adriana Michelle from TMC Financing, and Dennis King and Ali Lopez from Access SBDC. And our topic today is SBA lending. Before we get started, just a few quick notes. First is a little disclaimer, which is while we try to make every effort in good faith to present accurate and up-to-date information, we'd like to remind you that you should always consult with a financial or legal advisor on critical issues, as we cannot accept liability for misinterpreted information, first of all. Second is, as you likely noted upon joining in today's session, this webinar is being recorded and will be uploaded to our YouTube channel. And then we'll also send you over the slide decks that you see today via email after the program. There will be an opportunity at the end of the presentation for Q&A. So please enter your questions in the Q&A tool to ensure that we get your question and provide a response. We might also use the chat tool to post links or information throughout the presentation, so keep an eye on that. Finally, our webinars are presented on a monthly basis, so be sure to register in advance for upcoming sessions. We have a really good one coming up March 30th on commercial real estate basics and how to avoid eviction with Start Small, Think Big, a nonprofit organization. So our topic today is SBA lending, and specifically SBA 504 and 7A loan programs. You know, these programs can be a great fit for a business looking to acquire their own real estate to occupy, purchase equipment, purchase other businesses, or expand their operations. And one thing we've noticed recently, especially as rents have risen, is that owning your own business location can be key to long-term survival as a business. And so we are thrilled to bring you several experts on this topic, as well as the opportunity to talk with them through the Q&A function at the end. I'm going to introduce Julie Klaus. Julie is District Director for the Small Business Administration in San Francisco. And Julie has a really long history with the SBA. She has managed SBA offices all over the country and began her career with the agency in 1997 as a public affairs specialist for the Michigan office. And so we're honored to have Julie here today. Julie's going to speak to us for about 20 minutes or so. Then we're going to hear from our other speakers, and we will start with, so hold your questions till the end is what I'm trying to say, which will be around 4:30. So Julie, take it away. I'm going to make you a co-host so you have all the rights and privileges of a Zoom citizen.
All right, I'll have the power. So good afternoon, everyone. Thank you for joining us today. Thank you to the whole team at the City of San Jose for hosting the webinar. I'm going to try to share my screen. And today we're going to talk more about financing. And let's see if there we go. Hopefully this is advancing. So SBA, we are the federal agency that's charged with assisting small businesses. We provide a lot of different programs, probably most known for financing programs. And even within the financing programs, we have a lot of different types of assistance available. So we're going to focus most of our conversation on our 7A program, but I did want to let you know that we do have other types of financial assistance available. And they're meant to be something that can work with businesses any stage in your life cycle, whether you're a startup, whether you're a growing business, or even if you are maybe a tech startup looking for equity financing. So we have a micro loan program, which is loans of $50,000 or less. And we have on the opposite end of the spectrum, our small business investment company program, which is actually our venture capital arm, where we do equity financing and some debt financing through that as well. And then kind of in the middle is our 7A and 504 program, which we're going to be talking about today. Underneath the 7A umbrella, there are a lot of specialty programs, and I'm going to talk a little bit about those, but it's not super important that you know all the distinctions of these programs. It's more important today that you just understand more fundamentally how these programs work and how they can benefit you and how you can access them. But under 7A, this is a guaranteed loan up to $5 million is the guaranteed portion. And this is available through our commercial lender partners. There's some nonprofit lenders as well. And they provide the loan and SBA provides a guarantee. And we'll talk a little bit more about that in a bit. But one unique program, sub-program of 7A is Community Advantage Loan Program. And this is for loans that are up to $250,000. And these are offered through nonprofit organizations. So it's a little different than the traditional commercial bank. It is a nonprofit lender, a mission-based lender who is going to offer smaller loans. So we often see people moving from microfinancing into maybe a community advantage type loan or a 7A loan or the 504 loan if they're looking to acquire fixed assets, especially if they're looking to buy real estate. And so Adriana is going to do the deep dive into 504. So let's talk more about 7A. I also throw up another specialty program, surety bond guarantees. This is a financial tool. It's also a government contracting tool, but we also guarantee bid, payment, and performance bonds for small businesses as well. So we do want to do a side-by-side comparison of the three major programs. This is just kind of a rough outline and how they compare next to each other. So this year, you see the maximum amounts available under each. Microlending is $50,000, 7A is $5 million, as is 504. The SBA portion is limited to $5 million. This past year, 2021, we had record level lending, and we had over, I think in total, we had about $1.4 billion in guaranteed lending. And that's just here in the Bay Area, the 14 county area that my team covers. So we have average loan sizes of $1 million, which is very high. But you'll see we had a lot of success, a lot of interest in the 504 program. And we have a lot of businesses that were able to acquire real estate for their business or do other heavy equipment and other purchases. The nice thing with these programs is that you can, the microlending and the 7A, you can use that for pretty much any business purpose. It is working capital. You can use it to buy inventory, equipment. You can use that to buy real estate as well. Or if you're going to acquire a business, pretty much any business purpose. The 504 program, which Adriana is going to talk about, is more specialized. It is fixed assets, acquiring fixed assets only. But 7A is flexible. The program does have different terms and different fees depending on the amount of money that you're going to borrow and the maturity. What's you know, we don't need to cover all the details of that today, but just to let you know that the fees that are assessed in the 7A program will vary, as will the interest rates can vary as well. The interest rate is something you will negotiate with your lender. SBA does not set the interest rate. What we do is set a cap that banks cannot charge more than the cap. You will find with lending, that seems counterintuitive to many, the less amount, the smaller the loan, the larger the fees typically, or the larger the interest rate. But the larger the loan, the interest rate might come down a little bit. Right now, for this year at least, SBA is not charging any fees for 7A loans that are $350,000 or less. So that is a nice thing for this year at least. SBA is not what we call a collateral lender. So while we will ask a business to pledge available collateral, that is not a sole reason that we would decline a loan. So if a business cannot fully collateralize the loan, but everything else looks really good, everything else falls in line, we would not decline the loan based solely on lack of collateral. The lenders that are out there, they run the gamut. They're probably nearly every bank that you can think of is probably our participant in SBA's program. But a little bit later on, I'll show you where you can find some lists and how to figure out who those lenders might be. And then in the bottom of the slide, I just have some data to show what we did this past year in the program. This is, again, just in our 7A 504 and micro lending program. This does not account for any of the COVID financing that we did this year. So people often ask me, are banks still lending, you know, given the uncertainty? And the answer is yes, they certainly are. And they're doing it in record numbers right now with utilization of SBA's program. So let's talk a little bit more about 7A. So who is eligible? Essentially, you have to be a small business, and that's small according to SBA's size standards, which are based on your industry. And I will let you know, you probably are a small business. The size standards are very generous. So most people are going to qualify. That's usually not a problem. You also have to be a for-profit business. So unfortunately, our 7A program, we cannot lend to nonprofits. You do have to be a for-profit venture. It also must be owned at least 51% by US citizens or legal permanent residents. Owners cannot be on probation or parole. And SBA will consider what we call credit elsewhere. And this means we look at who you are as the owner, what financial resources you have available to you to see if you have access to financing through a different, personally or through a different avenue. Again, this is not going to prohibit the loan, but what SBA is looking for that you have pledged and you have supported your business, you know, as much as you can, since you're asking SBA and the bank to do so as well. So we can lend to businesses in pretty much every industry. We do have a couple industries that we are prohibited from, though. And there's the list here. I do want to point out, we cannot lend to people who are purely real estate investors. So if you want to buy property to locate your own business, that's okay. But if you are purely an investor, meaning you're going to buy it and resell it or lease it out, that is prohibited under this program. Similarly, because we are in California, I do have to note that the industry that you're in needs to be legal at the federal level. So cannabis industry, unfortunately, we are not allowed to lend to cannabis businesses because that is not yet legal at the federal level. But most industries are not going to see a problem. So I'm not going to spend a lot of time talking about the 5 C's of credit, but a lot of people want to know, how is their loan going to be considered? What criteria is the bank going to utilize, or what factors are important when making a decision to lend money to a business? And the 5 C's of credit still hold true. These are still things that are very important. And I think as a borrower, it's great for you to understand what these are before you go approach a bank or another financial institution. And I know we have Dennis and Allie on our SBDC network, and that's another great resource to help you better understand what these 5 C's of credit are and how to make your own self-assessment to see that you meet these 5 C's. So the important thing you'll see on here, they're all important, but one of the most important ones is this capacity, the ability to repay the loan. The lenders really want to know, can I get my money back? And so they're going to rely on cash flow analysis. If you are an existing business, they're going to look at your historical records. If you are a newer business, you won't have that, obviously. So it's going to rely solely on projections, which is a little tougher because it is your best guess. But the cash flow and demonstrating that in the next, several years, you're going to generate enough revenue to pay all of your bills, the bills, that you have on a recurring basis, and this new debt. So cash flow is a very important piece of this, and that's one area that if you don't understand cash flow as well, I would recommend you maybe work with a business advisor to look at your financials, look at your historical cash flows, and see what you can manage moving forward into the future. Collateral is on here, as I said, only because if SBA and the lenders will ask you to pledge the business assets that you have available. But, for service industries and some others, they might not have a lot of collateral. And so that's okay. But where, these other C's, these other 4 C's need to look really, really good. But SBA won't decline a loan based solely on lack of collateral. So how do you apply? So the first thing you need to do is understand how much money you need. And I know that sounds really basic, but I meet people again and again who might say, well, I can make do with $150,000. But if they had $300,000, they really could fulfill all of the plans and opportunities they have in front of them. So I say this to say you really need to decide how much you need to make you successful. And don't do it halfway. Really, look at what you want to do for your business and see how much money do you need that's going to make you successful, get you to the next level, get you to that point where you are earning more revenue. And then you want to make sure you have a business plan of sorts. Most lenders are going to want to see the basics about you, who you are, what you're doing, who your key employees might be, a little bit about your industry to make sure you've assessed the marketplace. But they're really going to look a lot at your financials as well. So your income tax returns, they are going to look at your personal returns in addition to the business returns. And then for the business, they're going to want to see your profit and loss statements and any other financial documents that you have. They're going to want to see that cash flow that we talked about, historical and projected. And then they're going to want to see, like I said, the business tax returns as well. They will also, even though it is a business, they are going to look at you as the owner. And for SBA's programs, they're actually going to look at anyone who has a 20% or greater ownership interest in the business. So if you have 3 owners that each have 33%, all 3 owners will need to provide personal financial statements and their personal tax returns as well. If you have never gone for financing before, I think it's really important that you take a minute and utilize our business advisors, whether it's our SBDC, SCORE, Women Business Center, or we have a Veteran Business Outreach Center here in Northern California. Have them take a look at your plan. Have them take a look at your package, your financials. It's really great to have them take a quick review, see if it looks well put together. Are there any questions? Are there any pieces of information that are missing? Things that the lender might want to know that you can put into your plan now before you ever step foot into the bank. I always tell people, put your plan together, put your package together, and give it to someone who doesn't love you and let them review it for a very critical eye. Have all those that love you be your cheerleaders and champion you on your entrepreneurship process. But you want someone that's going to be there to help you look at your documents and things with that critical eye so that you can be as successful as possible going to the lender. So then you're going to decide on your lender. And there's a lot of them to choose from. My slide there we go. When you go to the lender of your choice, and we can talk about where you can find those in a minute, you're going to complete any forms or applications they might have. This whole package of business plan and financials, you're going to submit all of that. Anybody who's a 20% or more owner is going to submit their personal information and be asked eventually to sign a personal guarantee. Lender's going to review all of that information and decide one of three things. They can approve your loan request outright, and then that's great. They will service the loan. They will close it and service it using their own terms and conditions. They can decline it outright. And if they decline it, please make sure you know the reason why your loan is being declined. If they don't tell you, please ask. You do have a right to know why your loan was declined. And you want to know this because you want to know if there's an issue that you need to work on, maybe to go back to your business advisor and say, hey, this was a problem. I need to fix this, or I need to, think about this a different way. Or it could be a scenario that the bank, your package is not bad and you have what we call a bankable deal, but maybe that particular lender can't finance it for any number of internal reasons, an internal bank policy. So you want to know what the reason might be, to know if, hey, I have a good package, I have a good viable loan application. It's just, this isn't the right lender and I just need to go to somebody else. The third thing they can do then is they say, we'll approve it pending an SBA guarantee. And that's where SBA comes in. The lender is going to handle any communications with SBA. Some of our lenders are what we call preferred lenders, meaning they have the ability to offer the guarantee unilaterally without SBA's secondary approval. But either way, they will handle any paperwork or any communications with SBA. You do not need to make a separate trip to SBA. The bank will handle all of this for you. And SBA is there. We're in the background, and many people don't even know we may have guaranteed their loan. We're there. If everything goes well, you'll never hear from us. If things unfortunately don't go well, then we do jump in and work with the bank to honor our guarantee. But that's a different webinar. We hope we don't have to go to that one. So how do you find a lender? Like I said, there are a lot of them out there. Here in Northern California, you can look in our SBA resource guide on our website. Our district office page that's linked here has a list of all the lenders who have participated in the program and have done at least one loan on that list. The other thing is a tool on our website, sba.gov, called Lender Match. And what this does is it allows you to answer a few questions about your business and about the funding need that you have. And It then sends that information out to all the SBA lenders who subscribe to Lender Match. And those lenders can take a look at your inquiry. And if they are interested in speaking with you further, they will communicate directly to you and say, hey, I'm interested in talking about your proposal. So it's a kind of a way to send out your information and see who might be interested. There's no commitment through this portal. It is just a way to connect you with a potential lender. The other way is when Dennis and Allie come in and talk is through one of our resource partners. They're, hopefully you're working with them on the front end before you go for financing, but they're also great resources to help you find a potential bank or other financial organization. And we have a lot. I know that I'm going to scroll through these next slides a little bit quickly, but just to let you know that we do have a lot of variety of resources, whether you're looking for micro lending, and then when you're talking about the community advantage lenders that I spoke about, the subset of 7A, those loans of 250,000 or less, we do have dedicated lenders for that, and these are all nonprofit organizations. And then the CDCs that we're going to hear from next, but we do have a number of CDCs across the area as well. And then one more. Our partners. Here I've tried to focus in on who is South Bay focused resources, but if you're joining us from somewhere outside of the South Bay area, please visit our website to see the full list of resources available to you. And our best way to reach us is usually through email or phone, and it's our SFO mail at sba.gov. So I will stop sharing. And
thank you, Julie. That was so good. I feel very clarified about the rules and the different qualification criteria, and I've always been curious about some of those things. So thank you so much. I want to acknowledge Andrew's question in the Q&A. Andrew, we're gonna press pause because we're gonna rock and roll with Adriana for a few minutes here, and then we're gonna roll into Q&A. So I hope that's okay. And check this out. It's working. Do we see Adriana on the screen? No?
it says starting screen sharing, but no, it's not there yet. Oh, now you're there.
All right.
I believe Jaway has my PowerPoint. There you go.
Okay, thank you so much. I apologize. So
thank you.
I do want to introduce you briefly though. Adriana is a Vice President of Business Development at TMC Financing. She partners with lenders, brokers, and small businesses throughout the Silicon Valley. She guides them through the SBA loan process, helping them secure financing and achieve their goals of owning their own commercial property. And I can confirm she does this because I've known Adriana for a number of years, and she is really good at what she does. And so with that, Adriana, take it away.
Thank you. Thanks for the nice intro, and thank you for having me today. As Nate mentioned, I'm with TMC Financing out of San Jose. Our headquarters is in Oakland. We serve California, Arizona, and Nevada. So happy to be here. Next slide, please. Okay, so just a little background about TMC Financing. We're a certified development company. As Julie mentioned in her presentation, CDCs help with the SBA 504 loan program. And our mission is just to promote economic development. The SBA 504 was specifically created for job creation and to help small to medium-sized businesses create jobs and stimulate their local economy. TMC Financing, like I mentioned, is based out of Oakland, and we're the #1 SBA lender in the nation. Next slide, please. Okay, so the SBA 504 loan provides access to small business owners, access to capital to be able to purchase their own building. So small to medium-sized businesses, as Julie said, most are considered a small to medium-sized business, can use the SBA 504 program to purchase owner-occupied commercial real estate. So similar to the 7A program, the SBA 504 program is for business owners to occupy. It's not for real estate investors. The SBA 504 loan can also be used to purchase land, to finance construction, to renovate your space, and to purchase equipment. And I've worked with so many different industries to secure their real estate and to renovate so that it's suitable for their business need. Next slide, please. Okay, so there's a lot of benefits to owning your own property, and I have some notes here. So buying a building creates equity. Sorry, I have a dog here. So buying a building creates equity. So every payment that you're making on your building, it's an investment for the business owner's future. The main thing about the SBA 504 is that it also helps you stabilize occupancy costs. We've known, especially in this area, when it's time to renew the lease, very likely that your rate's going to be going up. So owning your building, you don't have to worry about unexpected rent increases. The monthly payment is always the same. So the SBA 504 loan offers a fixed rate and a fixed term for 25 years, 20 years, or 10 years. You can lease some of the unused space for, if you have a building that you're not going to fully occupy, you can lease some parts of it. And there's rules around that, but you can do that. And of course, there's a lot of tax benefits to owning your own building. And I would urge you to reach out to your tax professional to learn more about those benefits. Next slide, please. Okay, so a few little highlights about the program. One reason a lot of people appreciate the SBA 504 program and take advantage is because you can come in with as little as 10% down. So we know that having cash on hand is super important for a small business. So 10% down, especially in this area, is great. You don't need to have additional collateral for this particular loan. And as I mentioned, the rates are very competitive and the terms are 25, 20 years, or 10 years fixed. And just a little recap here, it provides financing for purchasing a building, renovating, construction, equipment, and you can also refinance your current SBA loan, or if you have a real estate conventional loan, you can also refinance your current loan through the SBA 504 program. Next slide, please. Okay, just a rate. So right now, this is the current rate for a 25-year fixed SBA 504 loan. So pretty competitive, and it's a great time to consider your situation if you're interested in purchasing a building. Next slide. Just a little example here of what the loan structure will look like. So with an SBA 504 loan, it's a shared financing structure. Typically, the borrower provides a 10% down payment. A certified development company like TMC Financing finances 40% of the project, and a third-party lender, generally a bank, finances 50%. And so here we have an example of the loan structure with a purchase price of $5 million. So, okay, next slide, please. Back to small business. Don't let small deter you. Most businesses are eligible. So here's a little recap. You do have to be a for-profit company. The SBA 504 program does have an occupancy rule, so it must be owner occupied up to 51%. And so those are like the main points about eligibility. Next slide, please. Okay, so generally the down payment for an SBA 504 loan is typically 10%. There are some unique properties that the SBA will consider special purpose, And here are some examples of what that would be. And in this case, 15% down payment, it would be required. So if you have a hotel or a motel, sometimes some of the branded hotels like franchise hotels, assisted living facilities, gas stations, cold storage facilities, parking lots, wineries, those are all considered special purpose, and the SBA 504 program can still finance properties like these. Okay, next slide, please. Okay, so I just want to provide an example of a deal that we recently did here in San Jose. And this particular restaurant is in Vietnamtown. If you live in San Jose, I'm sure you've enjoyed a lot of good food there. So in this particular case, this was like I said, a Vietnamese restaurant. The total project cost 4.4. They were able to do 10% down payment. And let's see. So we were able to finance the retail location and the improvements. So as you know, a lot of the properties in Vietnamtown or the spaces in Vietnamtown are just a shell. So you can't really just open up a restaurant that way. So we financed the improvements. They were able to occupy the facility 100%. And in this case, they had 40 employees. And as a result of opening this new location, they were able to add an additional 5 jobs. So back to the SBA 504 program, and the purpose is to create jobs. So I'm sure they've hired more. They're really busy. Their food's really good. They were able to secure a long-term location and make sure that their rent and occupancy costs are stable. So they won't have to worry about their lease going up so high that they have to, find another location, which is super important for those in retail especially. So shout out to Vietnamtown. Next slide. Okay, so the SBA 504 program is also great if you're looking to refinance your current SBA loan or conventional loan. So it provides access to equity a borrower has built up in real estate and still offering a low long-term fixed rate. So this is great if you have equity and you need some cash out. There's a list of what the SBA considers an eligible expense. And, if we have a consultation, we can review what your business needs are and see if that falls in line with what cash out is eligible for. But it's a great program that just allows people to tap into their equity and lower their payments, sometimes lower the rate. So this is a great product for those that already own their real estate. Next slide, please. Okay, and here's just a quick sample. I won't get into this too much about refinancing, but just a brief example here of what the structure looks like for a 504 refi with cash out. Next slide, please. Okay, so how to apply? For a SBA 504 loan, my recommendation would be to work with a certified development company like TMC Financing. As Julie mentioned, it's similar paperwork is needed as you'd need for a 7A. So you can reach out to someone like me or your local CDC, and they'll pre-qualify your business and let you know how much you can afford if you don't know, what you think your budget is. So you can start off with the CDC. I also work really closely with the Small Business Development Center and SCORE, and they'll help you, through the intake package as well. But you could start by getting pre-qualified through a CDC like TMC Financing. Next slide. If you're not ready for an SBA 504 loan, TMC Financing does have a micro lending branch, which is TMC Community Capital, and they have a lot of great loan programs for other business needs. A local CDC is a certified development company. They're all throughout the US. TMC is the #1 CDC in California and the nation. So to answer the question that came through, thank you. Next slide. And so, as I mentioned, I'm out of downtown San Jose. So if you'd like to get pre-qualified, if you have questions, if you're thinking about buying a building in the future, you're not ready yet, please feel free to reach out to me via email. That's the best way to get a hold of me. I also speak Spanish. So if you prefer to speak in Spanish about your business needs, I'm happy to do that as well. Thank you.
Thank you, Adriana. That was great. Thank you for helping a local San Jose restaurant expand at Vietnamtown. That is very cool. We have to go eat there now.
Yes.
Please think of some great questions for Adriana that we can take in a few minutes. But first, we're actually going to hear from Dennis King. Dennis has a long history in our region as a small business advocate and small business owner as well. He is currently the executive director of Access SBDC, and Dennis is also the vice chair of the City of San Jose's Small Business Advisory Task Force, in addition to a bunch of other stuff, actually. And real quick, Dennis is joined by his comrade, Andrea Lopez, who is currently the program manager for Access, and she's been a senior advisor with the SBDC for a long time. So Dennis, take it away.
Thank you, Nate. I was going to describe Andrea Lopez as my right hand, but she's going to be the one that controls the slides, so she keeps me on target. I think we're over prepared today, so I think we're going to focus in on a couple of particular elements. First of all, probably to acknowledge the great investment that SBA has been doing to San Jose and Santa Clara County in terms of its continued investments in trying to provide resources to the small businesses so that they can survive this crazy time period and thrive as rapidly as possible. Under Julie's guidance, there's been significant resources that's been applied here, and you see that through our partners. So certainly we've enjoyed working with SCORE, the retired exec organization. They do a lot of one-on-one advising as we do, but they take it from a slightly different angle. There is another SBDC starting January 1, and that's the SBDC Silicon Valley under San Jose State. And their particular focus is on innovators and the innovation technology, particularly connecting to the high-tech community here in San Jose, Silicon Valley. And of course, we do have a women's business center as well. And we collaborate frequently. We work together, we know each other, we support each other, we back each other up. Some are more able to work with others than each of us. So we don't think of ourselves as competitors. We recognize that there are different ways that we can help. And I guess particularly since COVID started, we also recognize that the need is tremendous. So I don't like to use the word normal, but normally we would be helping about 400 businesses a year get access to funding. And it's certainly been my pleasure to frequently use TMC. It's a first-rate organization. We have a lot of respect for what they do. And the fact that they've done it so well certainly makes our job easier as well. So I'm glad that Adriana was able to share information about her organization. But as I said, a typical year for us is about 400 businesses a year. In 2020, we helped over 2,700 businesses. We now help over 2,000 businesses a year get access to the funding. And we recognize that, at a level of 5 times what we normally do, and yet even with that, there's so much still that needs to be done. And the only way that that can be accomplished is by collaboration, by partnerships. And Nate, you with their small business resources that the city of San Jose has been provided is a great basis for us to be able to collaborate. I guess if we can skip through a couple of quick slides, Ali.
Where do you want to go? Where do you want to start?
Probably just the first one, just to reintroduce the fact is that, we're part of a network, and the best way that a network can work is with good people doing good things. And so we're blessed in this community to be able to do that. I may have to go faster than all that we want to do, but basically, even as Adriana pointed out with TMC, the focal point is the 504 loans. Certainly that's different than 7A. well, certainly one of the tidbits that we're offering to a number of the businesses that we're saying is that if you ever thought about buying your building, if you want to be your own landlord, this is a great time to do that, because as the clouds of COVID disappear, you're going to see a stampede to fill those empty spaces. And so it's good to get prepared for that. And this is probably a great time to be able to look at the idea of actually owning one of those spaces to make it your home for your business. And as they do, we also have other resources. So among our resources, certainly includes an interest-free Kiva loan for those that are just getting started on the economic ladder. And when it comes time to 7A and 504 loans, certainly the providers can walk you through the process. They can give you what's expected. You may run across glitches along the way. They may ask you for your financial projections. They may ask you more about your business plan. There's a number of elements that you know in your head, but somehow you've never gotten in a paper or a way that a banker could understand. That's where we step in. So we'd be glad to work with you to kind of fill in those blanks and talk a banker's language to get the results that you need in order to prosper. I think we can skip ahead on some major things. I think because of the time, I think that's really essentially our message. Certainly, we have also enjoyed working with some of the local communities. A number of them have stepped forward to do grant programs. It was our honor to manage the City of San Jose Small Business Rent Relief Program that happened in 2020. We just finished a grant program with the County of Santa Clara. Today, we can announce that there is a new grant program from the state of California for the micro businesses, the smallest of the small. In other words, think in terms of food cart, not food truck, and not restaurant. So what I really enjoy what's happening in the community from the federal level, on the state level, on the local level, is that they've really discovered the value of small businesses to such an extent that they're willing to extend themselves and provide as much access to resources as they can to survive this crazy time period. What Ali is showing is that the micro business is again the smallest of the small. We are going to be opening that program on St. Patrick's Day, and we're expecting to probably be able to help about 850 small businesses to be able to get access to those resources.
Dennis, is that website live yet or no?
It will be live on St. Patrick's Day.
Okay.
So it'll be live when people can actually apply. But we're also, in the meantime, certainly developing a waiting list so that we can direct people to that as rapidly as we can.
Very cool. I'm so excited about that.
So it's a first for us to be partnering with the state of California directly. Certainly we've promoted and supported their programs, but it's great to see that the state of California is willing to work with us in the very low end of the economic ladder that traditionally has been ignored, and it again reinforces the commitment they have to small businesses throughout the state, but for us, for the city of San Jose and the county of Santa Clara. Now, again, that doesn't really speak to some of the federal programs, but hopefully one leads to the next.
It's a great tip, and it's something our attendees today are hearing first. I don't think that's like breaking news. We should send out a Business Journal news alert.
Yes,
that should go on your e-blast on your website, Nathan.
We formally decided on the opening time, and Nate was about a half an hour before your program began.
Oh, cool.
So
Okay.
you are hearing it first.
Dennis, thank you so much. That's all really good info, and I love just the variety of the folks that we have today, the agency itself, and then the partners. So with that, we have a couple questions, but we want more, right? We want more questions for Adriana, Julie, Dennis, and Ali. So be thinking, and as you think, let's take Andrew's question. Andrew's question was, what is the difference between directly reaching out to the lender compared to using the SBA program. I might have read that wrong.
No, you read it
I
correctly.
don't speak SBA, I'm learning. So maybe who
Yeah.
wants to take that and maybe regurgitate it for me so I understand?
Well, I think if there's any confusion, I would like to clarify that for the 7A program, even though it's an SBA guaranteed program, you're pretty much only going to be working with the lender. So you won't have to make a separate trip to SBA. You don't have to start with us. In fact, if you start with us, all we'll be able to do is talk about the program and give you a list of the lenders. But the lenders are actually making the loan, and then SBA is providing the guarantee on that loan. So you do need to start, when you're ready, I should say, to apply, you need to go to the lender, but all the prep work and all the information you might need before you get to that stage, please do come to SBA or one of our partners so that you can get all of that information. Maybe that helps clarify.
And just to add a little bit to that, I work with several lenders. The CDC is like a liaison between the borrower and the SBA. So we could take a look at all of your financials, and then based on where you bank, if you have a strong relationship with them and you'd like them to help you with your SBA transaction, they can help you. If not, we work with several lenders and we know who has an appetite for certain industry types or your particular situation. So it's also good to start with a CDC if you're doing a 504 loan, and you can partner with them to find the right lender for you.
Yes,
That's awesome.
let Adriana do the work for you on that one. Okay.
Okay. So Tushar asked, I am planning to open an Indian grocery store in San Jose. First of all, awesome. I can't wait to go there.
Yeah.
What is the best way to approach for a loan? Is that maybe a question about when to approach a
Well,
lender?
there's some obvious questions that we would ask first would be, what's the purpose of the loan? So is the purpose for working capital to begin with above your private investment? Or are you trying to buy a building right off the bat? You know, what's your purpose? And then let's match that with an appropriate business plan. So this is where SBDC can help guide that. If she's just getting started, that's a great business to be in. But there are logistics that she's need to work out with the proper licensing with the city of San Jose. So we can help on that side as well.
Yes, I can assure you a grocery store is going to be welcomed in the city and we'll help you. Does Tushar, if Tushar would like to speak, I can type a message in the chat and I would be happy to put you on mic. So let us know. But in the meantime, anything else you would add, Adriana or Julie?
No, I was going to say, I think that there are a lot of follow-up questions to that, as Dennis alluded to. So I was going to say same thing. I would recommend they start with a business advisor so that they can craft the best path forward given their specific situation.
Okay, great. Oh, Tushar said yes. Okay, hold on just a minute. This is exciting. I'm going to allow you to talk. Here we go.
Hi, Tushar here. Can you hear me?
Oh, we hear you.
Hi. So I'm planning to open an Indian grocery store, as I mentioned, and I'm not going to buy a building. Initially, I want to rent a building. So this loan is primarily for the working capital. That my plan is. And that means if you want to share more, I mean, do I have a business plan at this point of time? It's in my head, not on a piece of paper. I'm very truthful about that. And how much money I have to invest, say, out of, say, X number, what's a percentage I have to bring in, what the percentage I can expect as a loan, and what's the process, when should I approach, and what's the process, what's the paperwork I have to do.
Do you want to jump in there, Dennis, or do you want to?
Sure. I think we're going to need to talk a little bit deeper. So I think we're going to need to take a look at your financial projections. So, I mean, there's a lot of variables that we'd like to understand. Certainly the cost of your rent, how are you going to provide for your workers? So we need to take a good look at your plan and get it out of the head and get it on a piece of paper that we can kind of analyze that. Julie offered a good suggestion about saying you need to take your plan to somebody who doesn't love you. Well, we may not love you, but we can like you if you can help us help you trying to capture your dream, your image, but let's put it in a language that a banker could understand. And from that, I think there'll be some questions in terms of how much are you able to put down? Do you have other resources? Do you have collateral that you can add? Or are you going to try to do this all out of yourself? I mean, all of those have a major impact in terms of how much money do you need to raise and how much of that you need to put in for yourself. You also need some contingency plans, because I've never yet run across a business plan for a startup that did exactly what it planned. So you're going to need some backup strategies as well. So I think having a very open, frank discussion with a business advisor that you can trust, either with one of our SBDC advisors or others, I think is a good place to begin. It's a good idea to start talking specifics with somebody that you can trust. And then from there, you have to work out your answers.
Yeah, I think that, yeah, working with the advisor is something I would strongly recommend, because they will help you. And they'll probably come up with questions you haven't even thought of yet. So really great to start there, and they will get you to a point where you are best prepared with both the written documents and with your plan and with your strategy, so that when you go to a lender, you can just have a great conversation with them and sell them on your idea and get that loan.
Awesome. Okay. I had a question about rates. Am I allowed to ask expectations about rates going forward? There's a lot of talk about rates changing at the Federal Reserve. Does that impact expectations for what lenders are charging for the SBA loan products, and sort of how long does that take to filter down?
Yeah, for the 7A program, like I said, SBA isn't going to set the interest rate, but what we do is we set caps on what the banks can charge, and it's depends on the size of the loan and the maturity. So basically what SBA's caps are prime, and that's prime like on the date that you're applying for the loan, plus a percentage. It goes anywhere, like I said, the smaller loans, you can have prime plus 4.7% as a cap. Remember, this is a cap. It doesn't mean that's what they're going to charge you. It is the cap. And then for the larger loans with a longer maturity, it would be prime plus 2.75%. So definitely something to keep in mind. And for the 7A program, it'll be prime on the day. They'll look at prime on the day you're applying. And so, yes, be cognizant of what the Fed may do, or what the plans are. But it's not going to, the dynamic is still going to be the same as far as the cap. So you'll just need to be able to factor that into your overall, size of the loan and the repayment ability based on whatever the interest rate might be when you're ready to get a loan.
Got it. Okay. We are going to put out a last call for questions. Does anybody in the language rooms have any questions? If they don't want to type, but would like to ask a question, we could have the interpreter speak, or have them speak. We'll give that a minute to filter through. I'm not sure I gave good instructions there, but.
I did see one question in the chat where somebody was asking about if I want to buy real estate, acquire real estate for my business, is it better to go 7A or 504?
Oh, right.
And I mean, and I'd love to have Adriana chime in too. I mean, I think it's best to look at both scenarios, and you can, do the math and figure out which is more advantageous for you. Typically, with most businesses, the 504 is advantageous for the reasons Adriana just said, that as a owner, you only need to, in most cases, put in 10%. So that's going to help you ultimately with your cash flow. But Adriana, your thoughts?
I think you answered that perfectly. It's always good to look at all your options. Take a look at how the 504 versus the 7A versus conventional. Talk to your lender, talk to us. The more information you have before you make your decision, it's only going to help you. So, I mean, I'm always going to say SBA 504, but for sure do your homework, and I would be happy to help you compare and crunch the numbers, as well as Allie. I know she's helped me as well when borrowers are making decisions. So yeah, definitely do your research, but 504, I'm biased.
So we do have a question in Spanish in the chat. Adriana, do you want to take a look at that for us?
Yeah. So do you want me to say it in English? What the question in
yes,
English?
and then you can answer in English and the translator will
Okay,
translate it.
so it says, if I already have a loan with SBA, can I refinance that loan and get another loan, or what would be better? So the SBA refinance program, the SBA 504 refinance program recently made the change where you can refinance existing SBA debt, 7A or 504. There's rules and guidelines we need to follow. As far as eligibility, we need to look at what exactly we're refinancing, if it's the building, if equipment was purchased. There's other things that could be financed through the SBA 7A program that the SBA 504 wouldn't refinance. So my recommendation would be to connect with me, and we can review your current SBA loan and just see if you meet the eligibility to refinance. But yes, you can, as long as you're eligible.
Awesome. That's good. Carmenza has a really interesting question, which is basically, hey, my business is still not established, but I do have some projections and it sounds like a real business plan. And that sounds like a super cool business, by the way, Carmenza. So can someone take this question around, what are my chances for a business that's still not established? How do we think about that kind of question?
Well, there's still a lot more that we would need to know. Adriana, you might want to talk about your micro business loans that's capped at 50,000. So you may not reach 70 or 80, but 50,000 is a long ways there. If you want to maybe talk about the qualifications that you would be seeking.
Right. So for TMC Community Capital, which is a separate branch of TMC Financing, they do work with those businesses that are in the very early stages. So in some cases, the business is super new. In other cases, the business owner may not have credit history or many different, I guess, variables. But I would start, talking to a micro lender, and they can assess your situation and kind of help you get to a point where you can get a loan for 70 to 80K. And I'll throw it back to Dennis. The SBDC is also a great place to start. But for sure, TMC Community Capital can help. It's not a real estate loan. They do offer working capital. They offer loans for equipment. In this case, if you have a non-diagnostic prenatal imaging, I know that machinery can get pricey, so they do finance things like that. So I would encourage you to reach out to TMC Community Capital, as well as Dennis and his team.
Speaking of,
and
go ahead, Julie. Go ahead.
I was just going to add, I just realized I didn't say that in my presentation, but from the SBA side, as far as eligibility goes, we don't have a requirement that you had to have been in business for X number of years or anything like that. Startups can be financed. They tend to be much more challenging to finance, but they're not impossible. And as Dennis said, we'd want to ask you a lot more questions. Some of that being on your experience and background in the industry and other things that are going to factor into the lender's ultimate decision. But Dennis?
You mentioned our team. I should really acknowledge that we have about 25 business advisors, most of whom speak multiple different languages and represent the cultures that represent the city of San Jose and the overall community. Most of them own their own business, so they are savvy in terms of understanding the needs of a business, but they have a passion for serving the community. And so when they interact with you, when our team interacts with you, we do, as Adriana pointed out, have relationships with a number of different funding sources, the traditional banks, credit unions, alternative funding. But when we interact with them, we're on your side. And I guess if there's any takeaway message from us is that you may be in business for yourself, but you don't have to be business by yourself. Take advantage of us and of other resources to help you get to where you want to be.
Sorry. Thank you, Dennis. That was really well said. Looks like we're out of questions. So last call.
I got a text. This is
Yes,
Allie.
Allie.
I got a text message from a client, and they asked for tenant improvements. How is that included in a 504 loan? I'm thinking that's for Adriana.
Oh, like the restaurant example, maybe.
Yeah.
Oh, yeah. So for tenant improvements, we can finance something like that. You know, when you own the building, you can add that on. There's a construction budget. You would need to connect with the contractor, get bids. So we would walk you through that whole process of, you know, making sure that your tenant improvements are done the right way. And I'm not sure if that answers their question.
Adriana, would the TIs, can the TIs be wrapped into the building purchase loan?
Yeah,
as well?
and a lot of times, yes. And a lot of times we do that. Like I said, like in the Vietnam Town example, there's a lot of restaurants there. There's also some doctors.
I know,
and
yeah.
you know, they need like separate offices or just like wall dividers to make it look like, you know, a medical space. So yeah, we can finance the building and then also approve an amount for any renovations or construction or improvements. So it's all together and it's all one payment.
And is that capped at the 5 million?
Yeah. Mm-hmm.
That can make it hard sometimes in the Valley, right? Because we're so expensive here. But there's still a lot you can do for 5 million, hopefully anyway.
So what if a project, say, for instance, is more than 5 million, so that you would have to get lending somewhere else because you're capped at 5 million? Is that correct? Is that I'm seeing it correctly?
Julie, do you know how to answer that? I've never come across that where
For instance, I have someone who wants to purchase a hotel.
Yeah, for 504, what I love about that program is that, remember, SBA's piece of it is 40%.
Right.
So our cap of 5 million is, you know, only limited is at that 40%. So we can do deals that are much larger when you package everything together, and just means the lender, you know, will be participating at a greater level.
Oh.
But you can bundle it. Just the SBA portion is the piece that's limited. So I have seen deals that are, you know, $8, $9, $10 million under 504.
Great. Thank you.
Okay. Okay. Well, thank you, everyone. Huge thank you to our panelists today who were amazing. And thank you to our attendees who bore with me while I had a computer explode during the presentation. I really appreciate your patience. And that's it. So thank you, everybody. We will reach out with to folks who registered with some of the information that our panelists shared today. And that's it. Thank you, everyone.
Thank you. Bye.
All right. Adriana, you have your hand raised.
I just wanted to know how many people we had in attendance. Do we have final numbers?
Xiaowei, I was like not watching. Do we know? We dropped off quite a bit. We'll check for you. We'll get a
Okay.
high point.
I'd love to know. Yeah.
Okay.
Thank you, everyone.
All right. Thank you, Adriana.
All right.
You were
Bye-bye.
great.
Thanks.
Oh, I
Bye,
said
everyone.
47. 47.
Woo.
Okay. That's not bad. We had 92 register. So
Typically 30% drop off.
really,
Yeah,
that was more than 30% though.
I know. Typically though.
Okay.
Thanks,
Yeah.
everyone.
Thank you,
Thank
Adriana.